All right, well, welcome back to another edition of Financial Accounting. So, today is our review day before exam 4, which is on Friday at 2 p.m. So, make sure that you have all of your homework done from chapters 7 through 8. If you have any questions about that material, please come and see me. I do care about you guys getting out of this class alive. I know it's been a beast, but if you're struggling on any of this stuff, if you think your study habits aren't working, just come and see me so we can get you up to speed. I want everyone to do the best they can, and I'll do whatever I can on my side to get you through and successfully navigate this course. So I'm available whenever you guys need me. Let me just check something here really quick. Um, Thursday, I have office hours from noon to 4, so feel free to just jump in there if you got a question on anything. If you have any concerns, of course, let me know. I'm happy to meet with you guys on the weekends too. So um, outside office hours, I'm generally pretty flexible. So just let me know what I can do. We're not going to have any class on Monday. That is a holiday. It's kind of like one of those makeups for our lost spring break, but I think it's also because Easter is this weekend, I believe. So when we come back, realize we're going to jump right into through Appendix F and into Chapter 9. The Exam 5 is primarily just about the biggest part about the Exam 5 is knowing how to calculate bond interest amortization. So all that stuff, we will cover that in great detail when you come back from that long vacation, short little vacation, whatever you want to call it, long weekend. But that's a quick turnaround. We go right into exam 5, and then we're getting pretty close to finishing up. The accounting cycle, this is the EC accounting cycle due on April 20th, 420, haha. That is the extra credit project on my accounting lab. So there it is. It takes a little time to get up to speed with it, but after it'll start to click with you pretty soon. So just my recommendation is start plugging away at that. That's 20 points of extra credit. That's just additional points. You need out of the class, you get there's 500 points I grade you on. So you just want to get as many points as possible on homeworks and exams and any extra credit. So that's just extra points for you. So if you get 95%, I'll give you the full 20 points on that. You need at least 70% to get any credit on that. So start plugging away. I know that's about 20 days away, but it comes up pretty fast. So I don't want you guys missing out on extra credit opportunities. We're going to talk about this exam. Now, generally speaking, I'll say that people tend to do better on this exam than they have been doing. The average tends to be increasing over time. So exam 2, we know that was a bit of a beast. There a little bit of a bump in exam 3. Exam 4, you'll probably see another little bit of a bump. But to keep in mind that at the end of the day, it all comes down to your preparation. So make sure that you're reading the book, doing the homework. Come see me if you need any help, all that stuff. One thing I want to highlight on this particular review are potential pitfalls, situations where people miss points because maybe they misread something. So before I get into that, though, I would just want to make sure that we're clear that this is on, Proctorio is monitoring these exams. And I have people reviewing your Proctorio and letting me know of any concerns or flags that come up for anybody who is not following the instructions closely. So make sure that just take that first 20 seconds and slowly scan the room, scan your desk, scan your scratch paper front and back. Don't have any electronic devices around you. I had to give a student a 0 because she used a graphing calculator on her exam. That's definitely not allowed. No personal computing devices are allowed, except for your computer, of course, but calculators, especially programmable calculators, that's not allowed. And that's something that everyone knows about right now. So I don't like to have awkward conversations with people, but it's out of my control. If they bust you, we have to have that talk. So just make sure that you're getting through all of those administrative steps at the beginning of the exam, and then ignore it, forget it. If you think you forgot something, email me. Okay, just try to be as proactive as possible. You still get one piece of scratch paper, label it page 1, page 2. show the scratch paper, hold on to it. There's, as you know by now, like there's a lot of calculations that are going on in these chapters. That's because these analyses that we're running through, like the double declining balance and FIFO and LIFO, you need to have like something that you can sort of sketch out pretty quickly. So in class, of course, I give you a couple different ideas. The book gives you some tips and tricks, and I'm just saying that the scratch paper is your best friend. Honestly, I was telling somebody this the other day too, that I get test anxiety like some of you do. And the number one way I kind of calm myself down in an exam is I just start writing things on my scratch paper. And writing things down, I don't know why, but for some reason it just kind of like gets me just focused on the material. And then as I'm writing stuff out, it just kind of it clicks like what I need to do. And so I'm able to just kind of focus. But a lot of anxiety I know going into exams. That's my recommendation is really use that scratch paper to kind of sketch out facts. Same statistics as before. It's 60 minutes, 21 questions, 3 points each. You can get upwards of 105% on this exam. No makeup exams. Technological issues are not an excuse for a makeup. Um, I'm starting to see a lot of you not use the practice exam with Proctorio. Realize that I cannot do anything for you if you have technological issues. Okay, everyone's subject to the same rules. So please, please, please make sure that you at least try to get into a practice round with Proctorio on Blackboard before you attempt our exam on Friday. I cannot emphasize that enough. That's why I put it up there. I just don't want that to get in the way. All the material we're testing you on is coming from your textbook. So hopefully you guys have been reading before coming to class, because we lecture on that material that you've been reading over, and the homework is the application. This is just a good reminder too that the reason why this class is challenging is because most of the time students are going to come in expecting just to be tested on their memorization skills, so their knowledge and comprehension. And that's on Bloom's taxonomy is a theoretical paper written back in, I believe it was the late 50s, about how humans process information. It's been around for years, and my wife's a teacher, and so she has definitely done her research on that. This class doesn't just test you on the knowledge and your comprehension. This class moves you up into the realm of application. So this is why I believe this class is primarily such a beast, is because it's forcing you to undergo a lot of cognitive strain more than you're used to, and that's just the way the class is structured. And so that's why it's important you read before you come to class, so that way you can see how we're doing it in action. How you see accounting in motion is really key. So if you're struggling though with studying habits, come and see me so we can figure out a strategy, because I can definitely tell you, for those people who are considering accounting, that this is the standard. We push you guys pretty hard throughout our accounting program. And so the number one thing you can do is learn how to study. Some people consider this, I had to teach myself this material. And I say that's what studying is. Studying is about teaching yourself and then coming to class and then seeing it in motion, asking questions. So I'm sorry if for some of you feel like maybe this is like a little bit more than you were expecting, but I just don't want to give you a false impression of success, especially for down the road, because you guys are really very ambitious, and I just want to help you with as many tools as I can before you move on from this class. Enough about that. Chapter 7, we got 5 learning objectives, 11 questions. Here's the breakdown roughly. There's definitely some mathematical type questions for sure, but I think that the questions really sort of boil down to what's the journal entry. So procedural questions are asking, hey, what do I have to debit? What do I have to credit? So may involve some calculations. But at the end of the day, the procedural stuff is, okay, where does this go? How does this affect this account balance? Things like that. So make sure that, if anything, go back and create like a little study guide on notebook paper of the journal entries that we've been going through. Rewrite them out, rewrite the examples. There's something, it will stick in your brain if you even if you rewrite your notes. Roughly, somewhat heavy, I guess, towards the end. That's where we started seeing a lot of the applications of the concepts. They're all little concept questions tend to come from the first couple learning objectives, but within there, we build off of that stuff. So a lot of the application procedural stuff comes from those later learning objectives. 8.1 to 8.5, 10 questions. Again, pretty heavy on the journal entry side of things. So sketch it out, use T accounts, whatever you can, sort of have a process so you can address these. Definitely 8.3, 8.4 being pretty heavy. Recall that we had to kind of like split class up for those two learning objectives. We had kind of had to stop halfway through 8.4 and then picked it back up in the other class. So that's definitely like a heavy emphasis on this exam or those learning objectives. Just as a reminder, you want to review all your homework. And more importantly, make sure you ask yourself why things are what they are. It's got to make sense. And if it's not making sense for you, don't worry about it. The book provides one perspective of the material. So when you're reading through the book, I agree it's kind of boring, but it's also just one perspective. And the authors are kind of giving you like the end result. In class, I try to provide a couple different perspectives while showing you how it gets there. So making sure that you understand why we're doing things, that's pretty crucial. So focus on the processes to help you derive answers. Review all your lecture notes. If you're missing something, the lectures, you can just speed through those lectures. They're on YouTube. If you have any questions about the lecture notes, let me know. I'll get additional practice on my accounting lab probably early tomorrow. Right now, we've got 3 homework assignments due tonight. So I just want you guys to focus on getting through those homework assignments before you start practicing anything else. You can work on the practice exams on Blackboard, that's fine, but make sure that you really get that information from the homeworks 8.3 through 8.5. And I'll get you some extra multiple choice questions to walk through there. Take the practice exam multiple times, but get to that point where you're on the third or fourth attempt, you're going to have to sort of like make an assessment of how well you know it, because you don't want to just focus on the practice exam. The practice exam gives you a lot of great examples of how I can ask you this material on an exam. But after a while, you'll start seeing the same questions repeated over and over again. So there's definitely diminishing marginal returns to this. So use that as a gauge to determine your readiness. Let's see here. Make sure you attempt one of the Proctorio-enabled versions of the practice exam. Be mindful of your time. Of course, I always say that. I don't see people having as much difficulty on the timing of this exam than on, say, the previous exam. Previous exam was like crazy. It was like LIFO, FIFO. You had allowance for bad debts. It was just insane. And that's one where people tend to run out of time because there's so many calculations. I think the only thing that really is a time suck on this particular exam is going through like a depreciation calculation, especially for like a double declining balance method, which we'll talk about here in a little bit. Number one way people miss points on this, I would say that the average would be much higher on this exam if people paid really close attention to the dates. Interest calculations, if you're off by 1 month, right? Obviously, there's probably going to be an answer that makes you think that you calculated right. Draw everything out. Sketch down the facts. Make sure you practice writing down facts on scratch paper. Okay, and scratch paper is going to be your way of communicating with your thought process to me when all is said and done. Don't do it all in your head. Let's see, T account. That I think this is the number one thing that I tend to see on people's scratch paper when I talk to them about exam forest. I see them sketching out a lot of T accounts for accumulated depreciation, interest payable, interest expense, payroll taxes, things like that. So journal entries are usually the starting point. Then we post into the ledger. Some people just skip right to the T accounts and start to plug in what information goes where. Know any questions that cause you trouble, and then come and see me. I usually give a wait period of 24 hours after you take an exam before we jump back into it. But definitely feel like if you have some time left at the end of this exam, and you go back and feel free to go back and check your mathematical calculations. I don't really recommend second guessing your answers on concept questions, because that can really mess with your mind. But write down justifications, for things, or you put little, some people say they've had little question marks next to certain question numbers, and that's good, but make sure you write down why. What was your confusion like? Because I want to help sort of get you over that hump. Let's see, any thoughts, justifications? This is a checkpoint, just like all the other previous exams. Again, this is not a judgment on you. Some people have a lot of things going on in their life right now. Not just other classes, but personal issues. And I'm working with a lot of you on those right now. So Just don't get discouraged. If you think, you know, if you're worried about how this exam will affect your overall course grade, talk to me first. Don't make any assumptions. Okay, I do care about your success, so don't don't try to rationalize the wrong thing. Okay, be nice to yourself and talk to me if you're concerned, because I want to get you guys passing this class. Exams are not do or die. A lot of people think they are. They're not. It's not a judgment against you, just an assessment. For our assessment purposes, we give everyone, we administer roughly the same type of exam across all sections. You know, people get different questions in different orders, but you know, these are just questions that, like I said before, they're out of my control. But you just, you know, you want to come check with me if you missed. I was talking with somebody yesterday on their exam, and I can tell on my accounting lab that they've been working hard. Their homework scores are high. They have a high success rate on their first attempt, but they didn't do really well on, you know, the exam. And so let's take a look at it. And it turns out that I think on most, or if not all, of the questions that were missed, it was just a misread. Just on the way, maybe it was just the test anxiety that kind of like made them think one thing or the other. So in reality, I think that student actually did really well on their exam, but they didn't really see that based on the score. Your score tells you one thing, right? Whether or not you got 100% on each of the questions. But when you talk to me, I can give you information as to whether or not, if I were able to give you partial credit, whether or not you deserve that, because I don't want you guys getting discouraged because simply you missed all the points. Chances are you do know the stuff. It's just there was one thing that just didn't click. So talk to me about this. Accounting's a verb. You know, we gotta practice this stuff, right? You gotta come to class with that knowledge in your mind so you can see how we work through this stuff. And then I hand over the tools to you, and you go work on the homework. So make sure you're using the homework appropriately, right? You don't want to just find out answers and work backwards. That doesn't work, guys. You got to approach the homework as if you're ready to apply the knowledge that you have. And memorization is not going to help. So you know that by now. You got to condition yourself. You got to practice doing this stuff. And if something's not clicking, hey man, I'm available 8 hours a week in office hours, and I'll meet with you day or night, weekends, if that's the only other time I can meet with you. So I'm just realizing I'm here to help out. Questions that students tend to miss on the exam. So I talked about before, reasons why people miss questions tend to be like skipping over or misinterpreting certain details. Details are extremely important. Some people, one of the questions on the previous exam talked about inventory errors. So if we had, in 2019, inventory was understated at the end of the year. And the question says, what's the effect on net income in 2020, the following year? Some people, they misread that and they said, oh, I thought it was for just 2019. So things like that, you know, I can't do anything for you point-wise, but I believe you guys know it. Just be very careful. Be very careful when you're reading through these things. Determining the total cost to be recorded. So there's a lot of different things that go into, you know, recognizing costs of land. So realize in the case of land, you know, if we have to pay money to clear it, to clear the land, demolish a building, whatever, we got to get rid of that crap. That's part of the land's overall cost. It's really when the land is ready to be used, that's when we stop capitalizing. And if there's maintenance expenses, we just expense those as we go through. But in contrast, so, you know, yeah, clear the land, prep the land, it's good to go. If we decide to put, like, I think we said in class, a parking lot on top of it, that doesn't go into the cost of the land. That's a separate asset. It's just getting the land ready is all capitalizable. And the same goes for pretty much any other type of asset too, tangible or intangible. We pay money to get it ready to be used, like a piece of equipment, testing, you know, paying for somebody to test it, try it out, you know, all that stuff is capitalizable, right? If we build up a special closet or room for our servers with air conditioning, that's capitalizable, okay? Once it's ready to be used and we flip the switch, we stop capitalizing. This is one that people tend to miss quite a bit too, the lump sum purchase or the basket purchase. So we walk through an exam, walk through an example in class. And the book has like their way of doing the calculations. I sort of showed you more like a visual way of seeing them. But just realize that when it comes to the basket purchase, we're going to pay some sort of big lump sum amount. But what we get is potentially two very heterogeneous items like the land and the building. And we know we can't just allocate 50-50 because the market values, the fair values are a little bit different. So I think in the case of land, we had said that was 300, building was 2.7 million. And so that sort of broke down between, I think that was, we just said that's 10% and that's 90%. This is all based on fair value. So we need the fair values to sort of help us tell us how to break out these percentages. Then we go back and then we apply that to whatever we actually paid out in cash, determine what the cost basis is. So go back, sketch it, be able to sketch it out on scratch paper. That's my number one recommendation. Go back and just sketch out that problem we worked through, in class or from the book. Make sure you just know how to do that. If you're confused about that, just come and see me tomorrow or set up an appointment. Excuse me. Let's see, expenditures on equipment. So when we spend money, it's an expenditure. Do we debit an expense or do we debit the equipment account itself? Most of the time, we're expensing things. Once we get the equipment ready to be used and we're using the equipment, at that point in time, we stop capitalizing, we just expense everything. So if we have a car or something, we put on new tires. Okay, that's an expense. That's just maintenance expense. Oil changes, things like that, standard, right? But if we put in, like, say, a new engine, right, or transmission, okay, that's extending the useful life of the asset. That's making the asset bigger, faster, stronger, kind of a thing. So if we're actually improving the asset, not just trying to maintain its workability, but actually making it better somehow, those costs that we spend are capitalizable. Anything else is just routine maintenance. Most of the time, it's just expensing things. Depreciation, obviously, that's going to be a big one that I'm going to test you guys on. So when is depreciation recorded? Usually it's an adjusting journal entry at the end of the year. How do we record depreciation? Well, we're using that contra account. So in the case where we have, like, say, equipment, we spend like $1,000, we flip the switch, we start using it. Over time, it's going to wear out. So we don't directly reduce the equipment account. We set up an accumulated depreciation account, the contra asset account. So at time zero, we just flipped the switch. The net book value is essentially just the cost. But over time, if we're using straight line depreciation and it's over 5 years, we're going to every year record depreciation expense of, say, 200. And if it has a zero residual value, by the time 5 years is up, the total amount, net book value, will be zero. That's the residual. So we're not directly reducing these accounts. We're usually, for tangible assets, we're setting up an accumulated depreciation because this is just theoretical. We don't know for sure how much wear and tear this car or this computer has undertaken until we sell it and we figure out what the amount is that we get in cash. So realize that the equipment account, there's no change, no delta. That stays the same. Over time, we see accumulated depreciation increases over time. And then we also see that as a result, net book value is decreasing over time. And that's how we recognize the fact that the asset is losing value because we're consuming its usability. It's the net book value that we report on the balance sheet, not just the cost or its accumulated depreciation. We show the net of those two things. So that's how we determine how much depreciation is being recorded and what the end result is as far as book value, aka net book value, or NBV. Determining the depreciable base. I'm going to talk about that in a sec. Depreciable base and depreciable cost, sometimes that's used synonymously. I think I saw that in a couple of questions where that was sort of used interchangeably. Those are the same things. And that brings me to talking about straight line depreciation units of production. So there were three methods we talked about in class. We got the straight line method, we got the units of production, and we've got the double declining balance. And when we're doing the straight line method in units of production, the formula is basically the same. We start with cost, whatever that is. We subtract off residual value, whatever we think it's going to be worth when we sell it, and that's what gets us the depreciable base otherwise known as depreciable cost. That's just the total amount we're going to expense over the life of the asset. From there, the question really is, are we going to use, if we're using straight line depreciation, right, what do we divide it by? Well, in the case of straight line depreciation, we divide it by the useful life in years. So if it's, see above, it was, we knew that we're going to depreciate the full full $1,000. We would just simply divide that by 5 years, and that would get us $200 of depreciation expense per year. That's the depreciation expense. That's under straight line depreciation expense. But under the units of production, it looks almost the exact same thing. Instead of dividing by years, what we're doing is the useful life is going to be based in some type of units like mileage. So in the class, we use an example of mileage. So mileage, if we think that the car is going to drive 100,000 miles and then we'll sell it, then we'll just divide it by 100,000 miles. So whatever this case, maybe if we say we're going to drive it, say 10,000 miles, we'll say 10,000 would be the divisor. Miles, and so this is going to depreciate essentially 10 cents per mile. Okay, so the calculation isn't too bad. The units of production straight line, people don't really have too much of a problem with that, but just make sure that you're able to scratch that out on your scratch paper. And just know that when we're talking about depreciable costs, it's the same thing as depreciable base. The thing that drives people nuts is double declining balance method, and it's really about making sure you know how to start it. So recall that in class I said set up a chart. But before you do that, first figure out what is the straight line rate. The straight line rate is equal to 1 divided by the number of years. So if we have 5 years of useful life, that means the straight line rate is 20%. And then under the double declining balance rate, then is just double that. So it's going to be 40 in this case. I think most of the questions have I think this is usually on the exam, 40%, I think, is the double declining balance rate on most of them. It's either between 20 or 40%, the DDB. Third one you want to do is start sketching out a graph, but don't go crazy on this. Sometimes I recommend people just kind of do this towards, leave this question to last and just, again, monitor your time. So recall that when we talked in class, I said, go through a couple years of calculations. So for year one, we have a net book value, beginning net book value, and let's say we started with 1,000, and the double declining deaf, dumb, and blind percentage is 40%. We just multiply that across and get depreciation expense for that year. So that would be $400, and that's a lot, because the idea behind double declining balance is we're accelerating the depreciation. We're getting more value out of something in its earlier years than when it becomes a jalopy. And then from there, we just figure out what is the, back here, net book value at the end. And so this would just be the 1,000 minus 400, so that's 600. That's the net book value. So I just recommend just, go back and practice sketching these out by hand. That 600 is the ending net book value, and what we do with that is just bring it over into the next year. So year 2, 600 times 40%. 240, and then when we subtract 240 from the 600, we get 360. So just do that much. I think I only ask you at most 2 years, so don't go do the rest of the stuff. Reasons people miss this problem is because I can ask a variety of questions. I can ask you, for instance, what's depreciation expense, say for year 1 or year 2. All right, read the dates very carefully. Or I can ask you what's accumulated depreciation at the end of year 1, year 2. At the end of year 2, it's the sum of those guys. So you can use just this information. If you can sketch this out pretty quickly, you can answer this question fairly quickly. So I recommend just practice writing it out. Just practice writing it out. There were there were 3 homework questions back to back to back, where essentially I think they gave you the same information, but they said do straight line, then do units of production, then do double declining balance. And so I recommend just practicing those by hand. Sketch that information out on scratch paper. Only go like 2 rows worth. Don't do like the full 10 years or whatever it asks you to do. As long as you're comfortable sketching out the information and you're getting the right answer, trust that on the exam, I'm giving you as much as possible simplified version of those facts. That is the depreciation. So comparing depreciation under each method, which one is going to have higher depreciation expense early in the life versus late in life. I think we talked about that in class too, where I said straight line depreciation is just straight line. Under double declining balance, it kind of goes like this, right? So more depreciation than straight line early, less depreciation than straight line later on. Just make sure you can like sketch out a graph so you can answer those questions. Determine gain or loss on the sale or gain or loss on disposal of long-term assets. What's the journal entry to record the sale? I typically just use T accounts. So like I said up above, if we had the equipment of 1,000, and let's say accumulated depreciation, we start with 0, so net book value is just 1,000. Every year I'm just depreciating 200, 200, 200, 200. So let's say at the end of the 4th year, someone actually says, hey, can I buy that off of you? At that point in time, I want to make sure that I've updated depreciation for whatever depreciation, even if it's a partial year of depreciation. I want to make sure that's recorded and updated, which brings me to another point. Make sure you know how to do partial years. Partial year depreciation expense. That's basically just kind of like paying close attention to the date, where we're at. And if we say like we sell it halfway through, like on say July 1st, we want to say that we have 1/2 year's worth of depreciation. We want to record that. But in some problems, I think I just give you. I just tell you flat out the accumulated depreciation balance is 800, cost is 1,000. At that point in time, when we sell it, there's value on the books of 200 net book value. What's the journal entry when we sell it? Just like we talked about in class, we just empty out these accounts. So sketching it, you can sketch out the journal entry. Usually just kind of say, all right, we need to get rid of this, make that go to 0, and we need to make that go to 0 too. So those two things are automatic. So if you practice sketching out that stuff, you should be fine for the exam. Then just make sure that you're putting things in the journal entry correctly. So first you're getting rid of the accumulated depreciation of 800, and then you're crediting the equipment account for the 1,000, right? So the journal entry doesn't balance here. The question comes down to this: did I receive any cash? If I received some cash, I want to debit cash for that amount. And that's why you usually put in the gap right there. I usually put it, if I receive cash, I want to put that in there. So if I did receive, say, $100 at that point in time, what more do I need to do with this journal entry to make it balance? Well, I need another $100 debit to make total debits equal credits. In that case, that implies that I had a loss. So I always recommend inputting that, figuring out the gain or loss. If you do it in a journal entry, leave the gain or loss to last and just plug in the rest of the stuff that you know. Another way to look at this, and I think we talked about that in class too, is you can just analyze this from a financial standpoint or economic standpoint. I gave something worth 200 and I got cash of 100. So if you just kind of look at that from an analytical point of view, it means I gave more in value than I received. So that means I must have had a loss of some kind. So like I said, a variety of ways you can sort of, look at these types of problems, but at the end of the day, you need to be able to tell what the journal entry is. And I think it doesn't really get, any more complicated than that. So go back and take a look at your notes on that and let me know if you have any questions. Intangible assets, why they're intangible? Because you can't touch them. Which ones need to be amortized? Well, anything that has a finite life, right? Meaning that, in case of patents have a life of 20 years. And so at some point, the legal protection that a patent provides to the business, it goes away. So we usually just do a straight line amortization. Similar to straight line depreciation, we just basically reduce the account for patents directly. So if we got the patents account, if that's 1,000, generally we don't use an accumulated amortization account, generally speaking. So we'll just go ahead and just say amortization expense on the income statement, and we'll just do that debit and do that credit. And so we can, and the reason why we can directly reduce that is because, it's verifiable. When a year goes by, we have consumed 1 year objectively of legal protection on that patent. So we don't need an accumulated amortization account. We don't need a contra asset account. But that one doesn't require too much. You just want to make sure that that we're just directly reducing that account. How is goodwill calculated? Recall that when we went through this in class, we said number one thing you want to avoid doing is using the target company's book values. When we're buying a company, usually we're paying more than the company's fair value of net assets. We only want to worry about the fair value of the net assets. Ignore the company's cost. We don't give a shit about what the company, with that target company we bought. We don't care about how much they paid, right? Or how they're amortizing things. At the end, when we buy a company, we go through line by line by line and revalue every asset item, every liability to fair value. That is what helps us determine whether or not there's any goodwill and how much that is. So if I'm paying, $1,000, see the assets were, let's say 500, and the liabilities were 200, right? At fair value, not cost. Then the net assets of the company are 300. So why am I paying $1,000 when the net value of the company is only 300? That's because I want there to be goodwill between me and the existing shareholders. I don't want to rip them off. I don't want this to be a hostile takeover. I want this to be friendly. So just remember that we're using fair value and you should be fine. It's not going to be a really arduous question. Just make sure you know how to just calculate the amount of goodwill. Natural resources, like the oil refinery we talked about, the cost is based on all the costs that we incur to get the oil refinery up and running. Once we start running the oil refinery, we just expense everything else as maintenance costs. Depletion, remember that depletion is the first step of the process. So I think I drew this. This is probably how I drew it in class. Current assets, right? Inventory. And then you have long-term assets, and that's the oil refinery, or oil reserve, excuse me, not refinery, reserve. Okay, so when we initially capitalize all the costs, we pay a bunch of cash, credit cash, and we debit oil reserve 1,000. Depletion is the process by which we pump oil out of the ground and we put it into inventory. So as I deplete, the oil reserve account is going down, the inventory account is going up. So now I have, let's say, $100 worth of oil I can sell. Then at that point, the step 2 is record the cost of goods sold when we sell it. So 2-step process, just make sure that you understand depletion requires us to first reduce the oil reserve, increase the inventory, then we can go ahead and record the sale. Let's see, what effects does depletion have on the balance sheet? Current liabilities. So this is chapter 8, which liabilities are short-term versus long-term. So you recall the notion of reclassification. When we reclassify, right? That's usually in the situation where we have debt that was started off as long-term debt, but it has some amount, or maybe the whole balance has to be paid off within the next 12 months. So key thing you just want to realize here is that it's based on a timeline, right? If this is 12/31, current year end, we want to look ahead and say, are we paying any of this long-term debt off or down in the next 12 months? If yes, then we want to reclassify from long-term to short-term. We just want to make sure that the balance sheet reports that portion as of this date. We want to make sure it shows on the balance sheet as short-term liability, not a long-term liability. The rest of the payable, the note payable, let's say, that can remain as long-term. So we look ahead 1 year to determine if we need to reclassify anything from long-term to short-term. AP turnover. Make sure you just know how to do these calculations. I think the number one thing that people miss or they forget about is, this is the key thing to remember, is how to estimate inventory purchases during the year. So that's I think I don't really ask. I don't think I ask you guys how to interpret turnover. I know that's a pain in the butt. But just go back and make sure at least you know how to calculate the purchases, estimate the purchases based on the cost of goods sold and the average accounts payable. Interest on the notes payable. How do people miss points on this? They calculate interest 1 month too short or 1 month too long. So dates, draw out the timeline. Please draw out the timeline. Write it out. If it's the beginning of the month when we start, you're going to include that entire month and then all the way through to the end of the next month, or the end of the period when we have to pay it off. When do we accrue interest? Usually we accrue it at the end of the year, assuming the note is still live and active into the next period. We still need to accrue interest incurred. So if the note goes, say we start halfway through the current year and goes all the way into halfway through the next period, right? Realize that we've got to accrue at this point in time, we have to accrue 6 months worth of interest expense. Even though we pay it all at the end of the note payable period, we still need to accrue for interest, and that's just debit interest expense and credit interest payable. But pay close attention to dates. Don't be too quick in that. Like sketch it out, kind of like we talked about in class. Payroll taxes, we talked a little bit about that as well. What are the journal entries for taxes? Make sure you understand net pay. Net pay, the gross amount that we calculate for taxes is what the gross amount of the salary expense, debit salary expense. That's for, what did we say? It was like $10,000, I think, in class. That was the example we used in class. That's the gross amount that we use to determine how much in withholdings need to be pulled out of the employee's paycheck. So we credit employee income tax payable. And I think we did that for $1,200. And then we did like a credit for FICA payable to the federal government, and that was about $800. So the net pay was what we credit for cash. That's the net. Net amount is what you get on your paycheck. So in this case, that would just be the 8,000. Okay, so make sure you just know the terminology and how those are done. I think one version of the question gives you information about percentages, and the other one just tells you flat out what the amounts are of withholding, so you don't have to do any multiplication. But just read carefully. And when it asks you, this is gross, this is net, make sure you know how to distinguish those things. The warranty liability calculations of that aren't too challenging. You just need to make sure that number one, you have to set up the warranty payable. So usually we do the debit warranty expense, credit the warranty payable for whatever we estimate is going to be the amount to compensate our customers. Then as claims come in, and we spend money to fix or repair any type of goods, we just debit that warranty payable for whatever amount is being fixed, credit cash. So I just kind of recommend just going back to the notes and sketching out those journal entries. Something about writing things down just helps you remember it better. So let's see here. Warranties, unearned revenues. Remember, unearned revenues are a liability. Okay, so initially when we get the cash, we are debiting cash, crediting the liability, just like what your landlord does, unearned revenue, that liability account. As time goes by, we debit that account down and we recognize revenue on the income statement. Revenue, boom. Those are the basic journal entries. How do people miss on that question? They miscalculate the number of months. So realize if we make an adjusting entry at the end of the year, you have to just carefully count the number of months that have been earned since the date that thing started. So draw out the timeline, make sure you're not 1 month over or 1 month short. Last thing, the contingent liabilities. What are they? They're basically liabilities that are expected to be paid out usually, but not always the case. So recall from class, we talked about level 1, level 2, and level 3. The first one is is this potential payout for like a lawsuit? Is it probable we're going to have to pay out some amount? And is it reasonably estimable? If that's the case, we need to record a journal entry and we need a note disclosure. If we're talking about, if it's not that, if we cannot estimate the amount or if we cannot determine the probability, if the probability is not that high, potentially that kicks us down into level 2 where we say, is it reasonably possible that I'm going to have to pay something out? If that's the case, like we saw on Amazon, they're just doing a note disclosure only. They don't have to record a journal entry. They're not hiding anything. They're just saying, we don't really know whether or not this is going to cost us money. And the last one's remote. And those are situations where we basically do nothing. So, and companies are getting sued a lot. So there's a lot of frivolous lawsuits out there. So let's see here. Anything else I want to bring up? Yeah, so I think just the number one piece of advice I recommend is practice just sketching out information in a way that makes sense to you. And if it's not making sense, just come see me. Tomorrow we can go over that. So those are all the notes I have. If you're good to go, feel free to log off. Otherwise, if you have a question, I'll hand the floor over to you. Are there any questions out there?